Hi, everybody, and welcome back to video number 6 in Chapter 11. And when we left off, we were looking at categorizing research and development costs. Here, under number 13, goodwill acquired in the purchase of a business, we're going to classify that as an intangible asset. The cost of developing a patent is going to be an R&D expense. That's developing a patent. The cost of purchasing a patent from an inventor, that's going to be an intangible asset that we capitalized. The legal costs incurred in securing a patent, well, we can make that an intangible asset as well. And lastly, unrecovered costs of a successful legal suit to protect the patent, we can also capitalize that as an intangible asset. The cost of conceptual formulation of possible product alternatives, here we're going to classify that as an R&D expense. The cost of purchasing a copyright, that's going to be an intangible asset. R&D costs, we're going to expense. Long-term receivables, that's going to be a long-term investment. And the cost of developing a trademark, that's going to be an expense. And lastly, the cost of purchasing a trademark, an intangible asset. Okay. R&D costs that are similar to R&D costs include number 1, startup costs for a new operation. Number 2, initial operating losses. 3, advertising costs. And 4, computer software costs. Let's take a look at the exercise here. Computing the amount to be reported as research and development expenses. So, the cost of equipment acquired that will have alternative uses in future R&D projects over the next 5 years. Here, we're going to have a capitalized value of $280,000, and we'll amortize that over 5 years at $56,000 of expense in the current year. Materials consumed in R&D projects, $59,000. That's going to be expensed. Consulting fees paid to outsiders for R&D projects, that's going to be expensed. Personnel costs of persons involved in R&D projects, that's clearly going to be expensed. Indirect costs reasonably allocated to R&D projects, that's going to be expensed. But materials purchased for future R&D projects, $34,000. So our total R&D expense is going to be $393,000. Here, Alphabet Incorporated's 2019 and 2020 income statement shows the R&D costs right under our cost of revenues, right? Okay. Here is their disclosure, and they have a table presenting the R&D expenses in millions, here and here. And they've computed R&D expenses as a percentage of revenues, and you can see it's fairly substantial. And they tell you what it consists of, here, 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 and here. And then over time, the R&D expenses as a percentage of revenues may fluctuate due to certain expenses that are generally less variable in nature. So they tell you a little bit about R&D so that you can make your own conclusions. So now we'll take a look at accounting for intangible assets under GAAP and IFRS. There are similarities. Like GAAP, under IFRS, intangible assets lack physical substance, are not financial instruments. In addition, under IFRS, an intangible asset is identifiable. To be identifiable, an intangible asset must either be separable from the company, it can be sold or transferred, or it arises from a contractual or legal right from which economic benefits will flow to the company. Fair value is used as a measurement basis for intangible assets under IFRS if it is more clearly evident. More similarities: with the issuance of a converged statement on business combinations, IFRS and GAAP are very similar for intangibles acquired in a business combination. That is, companies recognize intangible assets separately from goodwill if the intangible represents contractual or legal rights or is capable of being separated or divided and sold, transferred, licensed, rented, or exchanged. In addition, under both GAAP and IFRS, companies recognize acquired in-process research and development, commonly abbreviated IPR&D, as a separate intangible asset if it meets the definition of an intangible asset and its fair value can be measured reliably. As in GAAP, under IFRS, the costs associated with R&D are segregated into two components. Costs in the research phase are always expensed under both IFRS and GAAP. There are differences, however, between IFRS and GAAP. IFRS permits revaluation on limited life intangible assets. Revaluations are not permitted for goodwill and other infinite life intangible assets. IFRS permits some capitalization of internally generated intangible assets, for example, brand value, if it is probable there will be a future benefit and the amount can be reliably measured. GAAP requires expensing of all costs associated with internally generated intangibles. More differences. IFRS requires an impairment test at each reporting date for long-lived assets and intangibles, and records an impairment if the asset's carrying amount exceeds its recoverable amount. The recoverable amount is the higher of the asset's fair value less costs to sell and its value in use. Value in use is a new term, and it is the future cash flows to be derived from the particular assets discounted to the present value. Value in use. Under GAAP, impairment loss is measured as the excess of the carrying amount over the asset's fair value. And that ends Chapter 11. And when we return, we'll take a look at Chapter 12. Until that time, bye for now.